Good afternoon. I'm Gloria Nelson with TUG, and we're so glad to have you join us today for our TUG Connects 365 programming. As you settle in this afternoon and get ready for the start of today's webinar, let me give a brief introduction for TUG, the usergroup.org, for both our current members and those of you who represent organizations that have not yet joined our online community of Infor distribution software users. We've all heard that phrase that knowledge is power, and I can say with confidence that after today's presentation, you'll be waking up tomorrow with a little more of both. Today is but one of our many in-depth sessions in our TUG Connects 365 series. TUG webinars, online forums, and member events facilitate the timely exchange of ideas, information, and giving you tips to help you work smarter with more confidence. Now that's a powerful combination. If you're currently a member, it pays to get even more involved. And if you're not, please visit our website to discover why 2,300 heads are better than one to help you be the best at what you do. And now, without any further ado, it is my pleasure to introduce today's roundtable people that are going to be guiding you through all kinds of financial discussion. We're joined today by Della Coffelt, who is not only a TUG board member, but she's also VP of Distributors Corporation of America, Mike Chiapetto with Turtle and Hughes, and Kathy Lundquist of NSA. So Della, I'm going to turn things over to you and go ahead and take it away.
Alrighty, I'm going to share my screen here. Okay, whoops. Alrighty. Well, first off, I want to say welcome to everybody. I thought it was really important, given the year that we've had, to get all of us together, mostly to talk about what areas that we need to focus on for webinars and for the conference. Before we get started, though, I kind of like to find out what ERP systems you're running. So Gloria, if you would start the poll, I'd like everybody to mark which ERP system they're running. I'll give you a few minutes to do that. While you're filling that out, just to let you know, we're going to have a fairly quick meeting. It's going to be a roundtable, and a roundtable is going to utilize chat, and we'll get into that in a little more detail. Did everybody fill out the poll?
We have about a 73% response. If a few people want to nudge out from the dark edges of the screen and pop in your ERP, we're up to 78%. Anybody else? Going once, going twice, going 3 times, and we'll close the poll.
Thank you. So it looks like we have the majority of everybody is SX.e, but we've also got Fax and A+. Excellent. Excellent. Thank you, Gloria. Let me see if I can. So because this is going to be a roundtable and a virtual roundtable, it's not going to be where we can, as a rule, we're not going to be talking a whole lot. What I would like you to do, though, is there is a chat feature within this meeting. If you've got a question or you've got a comment or you would like to speak, if you would put that into the chat, then Kathy and I will be watching this, and we will unmute you and allow you to talk to everybody. So there is the chat, and also there is a Q&A section. So as we have our presenters giving their presentation, if you've got questions, go ahead and put them right into the Q&A, and we'll make sure to get them answered. So here's our agenda. We tapped the shoulder of Mike Chiapetto, thank heavens. He's going to talk about balancing. So as I don't know about you guys, but as I'm facing a year end, I want to make sure that I have all these processes in place, and balancing is an issue every day that a lot of us deal with. With year end coming, I want to make sure that we have year end closing processes in place. And I've got some questions on both of these. So we have Kathy coming on board to talk about year end, and then I'll close out the whole webinar with a roundtable discussion. So without further ado, I'm going to turn this right over to Mike.
So hello, everyone. And I'm going to get my screen shared. So talking about balancing, what I want to begin with is what is balancing about, the concept of balancing. The idea is that we're taking subsidiary detail and looking at it compared to a GL total amount. So as an example, invoice processing invoices your orders and creates an open AR transaction for what the customer owes.
Just want to let you know you're in presenter view and not attendee view. If you can just swap your screens, please.
I will do that. Thank you. I see that.
There we go. Thank you very much. Sorry for the interruption.
Okay, no, that's all right. Sorry about that. I clicked on the wrong thing when I hit it. For an example, invoice processing creates the AR transaction. And then at the same time, it posts to your AR GL account. The total of all your open AR transactions should add up to match the total of what's in your GL. So that's the idea of balancing. Now, the first step in doing balancing is setting up your balancing reports. And there's a bunch of things listed here. What I would say is, as we're going through this, I'm going to cover a lot of information quickly, but the slide deck will be available to you or watching the presentation later. So don't worry about taking a lot of notes at this point. Just kind of watch it and absorb the overall concepts. But the trial balances, there's 11, and they're listed here. Without reading through all of them, APAR, there's some GL ones, and then the next screen shows some in inventory, rebates receivable, and a value add one. And what I'm going to talk about is a strategy that I use currently working at Turtle and Hughes, a strategy that I've recommended to Infor customers for years and years of doing consulting work with the customers from Infor, working for Infor, is I like to set up each of those reports to send me an email every day with the detail. And then I hold on to those. I keep them. What I have is I have an Outlook rule that's set up that takes the emails that comes in and moves them to a folder, a corresponding folder in my Outlook PST folders. And I keep those forever. What I say with that is hard disk space is cheap. I can get a 1 terabyte USB drive that I plug into my computer that will hold hundreds of years of balancing reports, and I can buy that for $60 or $70. So the space that they take up doesn't factor in anymore. I have the reports back to 2013 when we went live, so I've got every single report that's there. I also like to schedule those reports to run prior to midnight each day, and I'll explain why in a minute. Now, those emails, the reason I keep them is if I need to go back and look at a point in time, that's the only way to reliably get to that information. Each of those trial balance reports has an as of function. That as of function is not reliable. I would say not reliable is the kind way of saying they really don't work. I wish they did, but the only way to really reliably have a report from the past is to run it and save it in my email folder. Now, what I do is, this is an example of what I do with my Outlook, is I have the folders that you see here where it has a 2 APRT and a 2 ARRT. Each day, the reports come into my email box, move to one of these folders. This snapshot that I took was on the 28th of October. So when I look at it, what I expect is to see each folder holding 27 reports, the 27 days prior to October 28th. And that goes back to, I like to run them before midnight so that they land on it for the day that the report was run. If I run the report early morning on the 28th, then I have to interpret when I see the 28th, that's really for the activity of the 27th. This way, when I look at a report dated the 27th, I know it's the 27th activity. And then down the lower part of the screen shows the detail of what's in those. So looking at my AP trial balance folder, you can see that I have a report for October 24th, 23rd, 22nd, 21st, every single day going back. Now, once you run the reports like that, the next step to have done is turn on in AO. There's a setting of tracking your balancing history. And I'll show you where you do that at. But what that does is it stores that information in a table called GLIB. It's your balancing history. And you can see that table in your account inquiry in GLIA. The AO option is in the web UI is what I'm using, so I'm showing that screen. But in AO, under financials and then period structure, there's a checkbox for track balancing history, and that should be turned on. No good reason for it to not be on. Then what that does is in my account inquiry, I can go there and I can put in, here's a function. And in the example I'm showing here, it's my ARRT function, my AR trial balance. The job name that I set up, I use the same function name, so it's easy to remember what they are. And then I did this for a start date of October 27th. And I did this screen on the 28th. So what that does is it gives me a snapshot of every division that I have for my AR trial balance in one place for that day. And using the web UI ability to sort the columns, I go to the difference column, sort there. And what I actually have, this is a real life situation, is it's showing me that my division 600 is actually $1 out of balance. Now, the key points of this is the GL account number is blank. If you notice in the top left, the GL account number has no value in it. When I go to the balance history, put in ARRT as the function and job name, October 27th is the date, click search, I get every division. Now, knowing that division 600 is out of balance, the next screen is the same one, the account inquiry. But what I did is I filled in division 600 and my AR control account. Still ARRT is the function and job name. The start date I left blank. Now what I get is the snapshot picture that each day's balancing report gives me is I can see every single day, and I can scroll through that. And from this, I can see that October 6th was the first date that I went out of balance. So I know that when I'm looking at the activity for that day, that's the date that I need to focus on, is October 6th. The next question to cover here, the next point that I wanted to cover is what to do when you're out of balance. So for instance, that one is out by $1. And there are a list of things that you should go through and check on just as your quick things to look for. The quick items I look at is, was the report run during the day when transactions are posting? The idea there is I could actually be doing invoicing or cash application while I run the report, and that's changing my detail that are being compiled for the report. Then when it gets to the end and it gets my current GL balance, I don't have details that match my GL. So I don't want to run them during the day. Next thing is I'll check to see, are there any open journals? Has anybody partially posted something that could have resulted in that out of balance? You also want to review your suspense accounts postings in case something was looking for the AR control account, couldn't find it, went to suspense. You need to clear that before you do your balancing work. The next steps are a little bit more detail level, is I'm looking at my GL postings to see, did anybody post directly to my control account? So in this case, I'd look at my division 600 account 11200 and see, did anybody post a GLET entry or maybe something from a non-standard function related to AR? So maybe AP or inventory, somehow somebody posted to my AR control account. I'd look for those types of postings. I refer to all those as being your simple, easy ones to find. And you can go through that list fairly quickly and either find out what's going on or rule it out. The other thing that I do is use GLIA, like I just showed you, the balancing history to find the day that it went out. So in this case, I knew that October 6th, I went out of balance for a day, for that day. Then in GLRA, I always try looking for that dollar amount. So I'd look through GLRA and see if there's a posting of $1 on October 6th. I'm an eternal optimist, so I hope to get lucky and find it quickly that way. And then, like I say, looking for any suspicious postings. And with experience, you get better at finding what is suspicious and what's not. If that doesn't pan out, then what you're down to is comparing detail level. And what I do is I take as what I call day one, the day before the out of balance occurred, and day two, the day it went out. So in my example that I was showing you, day one would be October 5th, day two is October 6th. And what I do is I take my AR detail for each day, and I get that because I've got that in my emails. I've got that detail ARRT. So I can get the October 5th ARRT report, the October 6th report, put all that data into Excel, line them up. And what I'm looking to come up with is what's my net change in my detail? So what are my new AR transactions that appeared from invoicing? What are the ones that closed out from cash application? And I know what's changed in my detail between day one and day two. And what I do is I compare that with all of my GLRA postings. So I'm looking at what's my detail change in my GL account. Using that, it's possible to find any out of balance amount. In fact, you can even find that going down to being a penny difference. And one thing that I bring up here is a challenge in that is getting that AR trial balance into Excel. Infor does have a roadmap item going on to make that part of standard reports that you can output to Excel. In the meantime, you'd use a tool that can extract data out of a PDF or a text document and put it into an Excel spreadsheet. The tool I like using is Monarch. There are other tools that accomplish the same thing, but you'd need to have some tool to get it out of the report into Excel. Are there any questions from anybody? And while we're waiting for those questions, what I'm going to do is turn this over to Kathy Lundquist, who's going to take over and present the next topic.
Yay.
So Mike, I'm sorry. Mike, we have one question.
Yes.
If you fail to run like the ICRTT, the trial balance, those trial balances have an as of date. Can you use those?
Yeah, that as of date, one of two things should happen. Either it should be taken off the reports, or Infor should figure out what it takes to fix them to make them work. But the way that it is right now, they are not reliable. They, at best, they could get you close. I have never found them to be 100% accurate, which goes back to why I run the report every day and hang on to that detail. So if somebody came in today and said in November 2020, they want to see an April 5th AR trial balance, I've got it. I don't need to try to run an as of report. I've got the actual report that ran on April 5th, 2013 in my Outlook email. So I can put my hands on it very quickly. But that as of date, what it does, to explain a little more detail, is it starts out with today, and then it starts adding back and subtracting transactions in an attempt to get back to what it was at the point in time you did it. The further back you go, the more additions and subtractions, the more chances for mistakes. And so even running an as of for yesterday, I haven't found to be reliable. So I have never used those, and I'd highly recommend you not.
Okay. We do have a couple of other questions. So Sean is asking, what if you're on a lower version or the cloud? Is that table or screen still available?
That table, it doesn't matter really what version you're on. I think it goes back to Probably older than most of you are. Unfortunately, it goes back to versions I recommend, but it's been there for a good 20 plus years.
Okay. Excellent. Well, that's good news. And then another question is how might IDM archiving reports change the way you archive? Have you used IDM yet?
I have not used IDM. That's on our possibilities for future. When we did the upgrade to WebUI, IDM wasn't completely ready to go, so we didn't go to it. But I will say that Outlook has been around for forever. It's very reliable, and while IDM is potentially a good replacement for it, it's new. It's I would consider it not proven yet. Personally, old dog, new tricks. I tend to go with the proven Outlook, and that's the one that I personally use. At the end of the day, though, what you really want is you want to have them saved, whatever mechanism you use, so that you've got them available to you. Knowing that the as of doesn't work, you have to have them saved that you can get to them easily.
Okay. It does sound like the as of date is definitely an ERS that we need to get in and the whole group vote on and get that fixed. Maybe once and for
Actually,
all.
as of has been there. It's been voted on and requested to be fixed for as long as I can remember, and Infor hasn't found a reliable way of doing it.
Okay. Then they need to get rid of it. Okay. All righty. Well, thank you very much, Mike. Now, just to remind everybody, we will have Q&A because I don't know about you guys, but I always come up with the questions that I wanted answered at the very end or the next day. So we'll go over some of our options. But Kathy, I think you're up.
Sure. And there may be a couple of these that we're answering that a couple of our other folks, when we come off of mute, might have variations of the answer. So I'm hoping that we have a lively conversation when these parts of the presentation are done. So the first thing that we want to talk about is a soft close versus a hard close. So year end is a soft close in SX.e or CSD. It doesn't really matter if you're on character, graphical, cloud, it's all the same. Backdating your journal entries is controlled by an administrator option. And I'll be showing you screenshots of this. And as Mike said, copies of the slide deck will be available afterward. We're actually going to be posting some white papers on the forum, so look out for those. I'm sure Della will send out a reminder as well. Backdating of journal entries is controlled by administrator options. And it's a combination of the first valid period and periods backward that allows you to back post within specific boundaries. So taking a look at that, I'm actually going to zoom in on this. So here's an example of an administrator option that shows the setting where you can back post a period. Now, again, the screenshots are CSD, but the same is going to be true if you're in GUI. The first valid period here of January 2020 means that you could in February back post to January, but in January of 2020, you cannot back post into 2019. The hard stop in this case is the first valid period, and posting backwards only one period. This next illustration is going to show you that you can back post up to 12 periods. And again, so over here you see periods backward of 12, and you'll see first valid period of 120, which means you can post backwards up to 12 periods, but with a hard stop of January 2020. You can't back post into 2019. So that means in November, I can back post into January. In December, I can back post into January, but in November, I cannot post into 12/19. There's also an option here for posting to current period only, which would disregard the periods forward and backward to only allow people to post in the current period. Based on the needs of most people in accounting, that's not very practical. It's practical to shut other users off, but it's not very practical in terms of accounting usually needs to keep the month open for at least a week, if not longer, depending on the cycle of the year. So this is a point we want to make because for people who are familiar with CSD, SX.e, you already know this, but if you're not familiar, this is a question that comes up continually. So to hard close a prior period or a year, you would change the first valid period, which is what we showed you on here for the first valid period. But If you want to say only some people can back post and other people cannot, that is currently not an option. There's an ERS out there, and it's on this slide, number 63680, that is to have this so that we can say only the specific list of users can back post. This is critical for people that are working in publicly held companies. And also if you have to have financial statements get out to your bank and there's nothing that's supposed to change those once you've published them, and you don't want anybody to be able to accidentally back post except for accounting for a certain amount of time. So this is a critical one for those of you who may be in that situation to go out and endorse, which is 63680. That number again, no, sorry. Okay, so on to the next. So the first thing that you want to do when you're getting ready to close out a year or even a month is to make sure that all journals are closed. So in this case, we're looking at GLIJ. There's multiple places you can see this. So if you're running, for example, a trial balance report, you run GLRT, APRT, there's an option on those that says, do you want to see any open journals? So you may see them at the top of your page if you have that option set to yes. Having said that, there are lots of times when you don't want to have to run a report to see that information. So you can go into GLIJ in your journal lookup and you select that you want to look at what's open. And then that'll give you a list of your open journals. And in this case, as you can see, I have the super annoying OEET journal that's still open, which can cause balancing issues when you're trying to tie out your cash. So an important thing, you can close your year, you shouldn't close your year with open journals. You can advance to the new year, but it's just good best practices to make sure days work in a day that your journals don't stay open beyond the day. And if for some reason they're still open and you've gotten to your year end, compel the users to get off of them. You can, in some cases, although it's not advised without, being very cautious, go into SISJ to force close journals that are in balance. This should be a controlled screen. Very few people should have the option to get in here because it can create issues, especially if you close journals that you should not be. The best practice is to have the user close their own journals. There may be occasions where that isn't possible. There may be situations with a POEI or a WTEI receiving purchase orders or receiving warehouse transfers where somebody got kicked out, they log back in, they're not given the option to close a journal. So there may be times you need to do that. One word of caution is if you use that function of SASJ, do not use it to force close open invoice processing. So OEEPI is your order entry invoice processing, and that updates a lot of tables. So that one is the only one that has its own special process, SAAJ, System Administrator Journal. And what that'll do is with an open OEEPI journal, let's say it gets interrupted by, I don't know, the system going down, or we sometimes see this happen when you run into a backup. So the invoice processing is still running and then the backup happens, takes the system down, or you have a brownout or something like that that interrupts invoice processing. And when you log back in, nobody's dragged into the OEEPI screen to close the journal. SAAJ is the way that you would continue the invoice processing so that it can update your inventory, your accounts receivable, general ledger, all of the files that SAAJ runs and touches. Are there any questions on any of that so far? Nope. All righty.
I think we're good on that.
Good.
Oh,
go ahead, Della.
I do have a couple of questions. How far back can you post back further than 1 year?
Yes and no. No and yes.
Yeah.
So there's several of us who are twitching. It's sort of like Mike is like, pick me, and we've got Steve and Janice and a few others going, I can answer that question. So the short answer is, in a normal situation, no, you cannot back post greater than 1 year. Having said that, there is a process that we can walk you through for how you would actually go back and do that. So technically, yes, you can. but it needs to be done with a couple of sort of like a couple of steps that you would need to know to do that. Mike, do you want to add anything to that?
What I would say is it's not even when Kathy says more than 1 year, it's not a 12-month period that she's referring to. You can post back to period 1 of the prior year. So if you're on a calendar year in December of 2020, depending on how your AO settings are, you could go all the way back to January of 2019. You can't get back into 2018 without doing something special, as Kathy said.
So having said that, yes, it can be done. We usually say, you know, speak with your partner, Infor support, whoever it is that you need to. But it's not a difficult process, and it's an illustration of something that we will talk you through later on, as in the dreaded, oh my goodness, can I do year end more than once with GLAY? And I'll let Mike come off mic for that one as well. So the next thing that we want to talk about is suspense accounts. We're not going to talk about this in depth, as Della mentioned. There's probably going to be a separate roundtable just talking about the bane of why things hit suspense. But let's say that you've gone through the year and things are hitting suspense, and for some reason it's not driving you insane. Some of us, it drives us absolutely crazy, even if we get a couple of pennies in there. The best practices before you close out your year, obviously, is to clean things out of suspense. Suspense is really what you would call unclassified. It's not an asset liability. It's not an income or expense. It's a thing that needs to be classified so that you can have a balanced balance sheet and a balanced income statement. The suspense account, general ledger, debit and credit, I also generally recommend that you do not have them go into the same GL account. So I see some people set up their suspense debit and suspense credit to hit and be one common account. And the challenge is sometimes you could have things going in there and netting against each other. So if you are having that situation or you aren't sure, the suspense accounts for general ledger integrations are set up in SX.e, which is the company setup. And you would also want to, for those of you who are not aware of it, you can get an event that will let you know whether or not something has hit suspense. So you can set up an EM, an event manager alert, so that you get notified that there's a suspense hit, which is a lot better than finding out at the end of the month when you're running a trial balance. If a suspense account has a balance, yes, it's tempting to just reclass it and get it out of there and post it where it's supposed to go. But it's a good idea to also analyze the reason that it went out of balance for the root cause. So an example could be somebody set up a new product category and they didn't tell the person that sets up the integrations for ICSEG, or somebody set up a new order entry add-on, or perhaps another tax. So it could be just that accounts have not been set up to accompany that, or there could be a problem. There could be a bug. There could be a challenge with maybe a modification. So that's something where you would want to find out what the root cause is. Okay, on to the next. So post-profit. Post-profit is something that it literally posts the profit for the month for a balanced balance sheet. I like to run these on every single time I'm closing out a month or a period. Some people don't run them until they actually get to a year end, and then they run them for each of the 12 months. If you want to produce a balanced balance sheet during the year, then it's a good idea to run GLAP, which is the distribute or post profit, at the end of each month after you've completed booking your entries for the month. And what you would want to do is run it for each period. You can rerun it multiple times if you need to during the year, because you may be doing things like back posting. So I may be in November, but I might not have fully closed out October or September yet. So I may be back posting, so I can rerun GLAP for those months. This gives you a view of what the trial balance, the GLRT, looks like with a before and after GLAP has been run. So in this one, you'll notice, and I'll zoom in on it, you'll notice that you've got a proof, assets minus liabilities. And yes, it's equal to the income minus expenses. However, that means that if I were to run a balance sheet right now, it'd be out of balance by $460. After I run GLAP, and again, I've got to zoom in on this so that it's easier to see. This shows me that my period to date has been posted, my profit, and my year to date has been posted. So I have my assets minus liabilities proof show that I'm in balance, and I have a balanced balance sheet. Any questions on that? Nope. Okay, now we get into our year-end processes. There are 4 report style processes to run in CSD, and they are as listed: the AP year-end, AR year-end, GL year-end, and IC year-end. And they have this big spooky thing around them because they're only run once a year, and they have the word administrator. So people think, oh my goodness, I'm so scared. So there's nothing to be afraid of. There's a few little caveats to be aware of. So the first is run them only once. So I'll say that one more time. Run them only once. There's times when you see that people have it set up as a stored report to run at the end of the year, and somebody didn't communicate with somebody else. So you've got somebody in IT who's running it and somebody in accounting who's running it, and one of them's running it on demand, and one of them ran it as a stored report. And suddenly we get a phone call saying, hey, we ran year end more than once. What do we do? So run it only once. It doesn't matter whether you run it on the last day of the year or the first day of the new year. You just want to make sure that you run it before starting business on the first day of your new fiscal year. They'll only produce a 1-page report. It's not sexy. It's not like a bunch of churning. It can be done so fast that people sometimes don't even realize they ran it. This is another one of those areas that should be tightly controlled. Very few people should have access to it, mostly so they don't have to worry about whether or not they ran it by accident, because you don't realize it. It just looks like a report, and then suddenly you say, what happened? Here's an example of what happens when you run the AP year end. So all it really does is this. It moves the year-to-date balances from year-to-date to previous year. That's it. Not a lot to it. You can run it also, for those of you who are not on a calendar fiscal year, you can run this twice. You would run it once for your 1099 vendors on the calendar year, and then you would run it for all other vendors when you are on your regular fiscal year. Let's say you go on an October to September or a February to January. You would run APAY twice, once for your 1099 vendors and once for your all other vendors. ARAY, similar to APAY, all it does is move the year-to-date balances from this year into last year, nothing else. If you run this by accident 2 times, when you go and look in your ARIC or at your customer balances, you'll see that year-to-date and previous year will be 0. That's an indicator that somebody ran it twice. And you would see the same thing as far as your vendors. If somebody ran the AP year-end twice, your year-to-date and previous year's balances would both be 0 for vendors that you'd actually should have had balances for. The next one is ICAAY, and that one just clears the year-to-date balances in ICSW, it should say, in ICSW. And you'll see it when you look in ICIP, when you're looking at your balances. This one does not have a previous year. So unlike the others, it doesn't move things from year to date into last year. It just zeroes out your issues, receipts, returns in and returns out, sort of like, tickers. And then the last one, save the biggest for the last, is the GLAY. This is the general ledger year end. And it, unlike the others, doesn't do that year to date this year, last year alone. It updates 3 particular areas. So it increases the administrator option for the year by 1. So if I were to run it now in 2020, I look at my AO, it would say 21. It copies the current year chart of accounts to the new year, and it copies the asset liability ending balance to the new year forward balance. So to show you what that looks like, it changes the AO by 1. And in the general ledger, it does the forward balance for any of your asset and liability accounts. One other thing to be aware of in general for a year end is if you're running a fiscal, doing that year end process, if you're doing a 13-period fiscal year, is not going to update these periods. So if you're doing a 13 period, after you've done your year end, you will need to go into the administrator option for your fiscal year and fill in the ending dates for the 13 periods. If your period 12 and period 13 have the same end date, like some people will use just that period 13 as an adjustment period, but not actually run it as a full calendar period or a full period, then the end date for those would be the same. So in this case, I'm showing you where the period 12 and period 13 both have the end date of 12/31.
Okay. Well, thank you, Kathy. We do have a couple of things and a couple of questions. Steve brought up a really good point about SASJ. There's a change in the latest release. When you reopen a WTES journal, it unships the transfers, which is actually great.
It's
which
fantastic.
is wonderful, because what happens is they forget to close it out. They forget that final update. So check your release. I guess it's in the latest one. So yay. That's really good. So there's a couple of questions. One, we've always heard, the world comes to an end if you fail to run, or you'd run, year end twice. That's not true, really?
It's not true, but I'll let Mike talk about that, because this is a passion of Mike's. He's just like, ah.
Yeah.
That's one, if you read the doc on GLAY, it warns you that the sky falls and the world ends if you run it twice. Actually, as Kathy shared, it does some very specific, very simple things. So if you ran GLAY twice, so say that you ran it today, you create your new chart of accounts for 2021, you change your year to 21, and it moves the forward balances. So now if you run it a second time, it changes your year to 22, creates your chart of accounts for 22, and moves the forward balances into that new year. All you need to do is go to AO and change your year back to 21, and you're okay. In fact, actually, if you ran GLAY today and your year ends December 31st, on December 31st, you'd need to run it again just to refresh your forward balances. So I'd run it today. It changes my year to 21. I go to AO, change the year back to 20 so I can finish 2020. At the end of the year, run it a second time, refresh my forward balances, create any additional accounts that maybe I've added, and then I continue on with doing 21. So I could run GLAY 20 times, go to AO, change my year back, and I've undone any damage that it did. So it's really not a big deal at all.
Phew. Well, that's good to know.
The only little caveat I'll put to that is it copies your current year chart of accounts to the new year. If there are certain accounts that you want to delete in the current year, you just need to remember to go into the new year and delete them too, because the chart of accounts stores in each separate year.
Oh, yeah, that's right. Okay. So then one other question. Do you run this on the last day of the year or on the first day? And why does it not really matter? Because of the way it just moves balances?
Yeah, that's a good question. So these actual processes for the average customer take probably about an hour altogether, all told. And it was one other thing we should mention is that you want to do it in each company and you want to do it in each database. So I would say that it does no harm. Like, so let's use a calendar year as an example. So it's going to be New Year's Eve, the 31st. Do I need to run these on the 31st? No. Do I need to run these on the 1st? No. I just need to make sure that I run them before people start getting into the system and trying to post transactions. So it's convenient to schedule them, for example, to say, you know what, just have it kick off on, January 1st in the middle of the night. Or if that makes you nervous, then just, get in and run them. It doesn't really matter if I do them the last day or the first day of the new year, because they don't really impact things very much, except for exactly what we've shown you. But you want to make sure that it exists before people try getting into the system. The one that will stop you is if you haven't done GLAY. So if you haven't done your GLAY, then the chart of accounts does not exist in the new year. And while people will be able to enter in orders and transactions, they won't be able to do anything that's going to update the general ledger, because they'll get this error message telling them that the accounts don't exist, because the suspense accounts haven't been copied into the new year.
I would add on to that, if I could. A reason you may want to run GLAY much before the end of the year is if you're using SX to do budgeting. You might want to run GLAY in October, create your new chart of accounts for next year, change AO back to 2020 and keep going with the current year. But now you've got a chart of accounts that you can start assigning a budget to for next year.
Oh, hadn't even thought of that. Yeah. Oh, that's a good idea. Okay. So a question has come up. Is there an advantage to using the 13th period?
I think so. That's one of those ones where I'd like to take everybody off of mute and let them say. So I would say that probably the number one reason would be distortion, right? So if you want to have a clean period 12 without the distortion that can be caused by audit adjustments, you put those into a period 13 and they sort of stand out there on their own. But you don't get this this weird skew that happens in your month of December. So you have a true December month, so you can see what that looks like from an operations perspective, and then a 13th period that then does that adjustment.
Okay.
It really
Okay.
depends on how anal of an accountant you are.
Yeah. That's a good point, though. There was another question on how to delete a group of GL accounts that are not used and have no history. Can you delete whole groups at a time?
To the best of my knowledge, you have to go into GLSA and delete them one at a time. If they don't have any history. Having said that, there's another function that people can use that's often not very well known, which is GLAC, which allows you to change accounts and you can merge accounts together. It really depends on the reason that you want to delete them. But I don't want to limit this to my knowledge. Is there a way to mass delete in standard to mass delete GL accounts that are no longer needed?
Not in standard.
Okay.
There is an enhancement request to add an active inactive flag to GLSA. Because there's been many times I want to delete an account,
Yeah.
but somebody posts to it and now I'm stuck with it for the whole year.
Mm-hmm. You can inactivate other records, but you can't inactivate a GL account without a modification.
Right.
Okay. Okay. Well, I want to thank both of you very much. I'm going to go ahead and let's kind of move more toward the roundtable. So remember, because we're virtual, you can post it in the questions, or you can just kind of visually raise your hand just in the chat if you've got something that you would like to share. First off, let's talk a little bit about what has really ruled this year, and that's the pandemic. So everything that we're doing, everything that we're attending, every meeting, everything has been virtual. We're working from home. What I have seen within the companies that I'm working with, the inside sales and sales, they all work from home, but accounting gets stuck in the office. So I'm wondering, let's do a poll. Let's see how many of you are working from home. And it's really always kind of a 50-50. Sometimes you're working from home or you're never at home. You're always in the office. And while you're filling that out, just to chat a little bit about this whole idea of working from home as far as, an accounting department and finance department, so much of what we deal with is paper. We have invoices coming via mail. We have invoices coming via email. We're dealing with paper, probably more than any other department within the distributor. Accounting always has to deal with a lot of paper. So the other question that I have, and this is one, I'm not sure, initially I was going to ask this in a poll, but I think what I'd like you to do is kind of just add this to the forum. What tools are you using? What are you looking at to help automate the accounting process? because the more automation that we have in accounting, the more that they are flexible for working from home. So it looks like we've got the majority of people just working from home sometimes. We've got 27% working from home and never. So 36% of us are going into the office every day. Well, and I'm in hopes that the pandemic will continue, the trend will continue downwards and we can stay in that mode. But it does raise that question of what process changes can we do to automate the accounting? So I know Max Recall has a way of being able to scan in an invoice and it automatically creates the AP journal. What are we doing with customers' checks that come in via mail? How are we getting those and getting those posted? So I'd like to remind everybody out on the financial network group, we can post this information, but I'd like us to start talking about what can we do? What process changes can we make that really focus on our accounting team? Processes for handling paper, allowing them to work remote from home. If we have an outbreak, we have to send everybody home from that branch. How are we going to handle all of that? Whoops, hang on here. Okay. So enhancements. So Kathy had an enhancement. So that number, once again, 63680. Let's get our votes in. But I'd like to talk just a second, because we don't have a ton of time. I want to talk just a second about the ERSs. We have about 60 of them out there. If you have an ERS that is lacking in votes, let's get out to the forum. But better yet, let's put that enhancement socialization, if you will, out on the all members site or out on SX.e General, and ask the IT people to go back to their financial folks and say, hey, would this enhancement request help you? It's a way for us to get better votes.
Hey, Della, I
Yes.
just put a link to that enhancement in the chat.
Oh, excellent. Thank you. Thank you. So everybody go out there and vote. So my next question that I would like the answers for, really kind of on the forum, unless you want to get on mic real quick, is I want to talk about some webinars. So for me, number one webinar I really want is suspense postings. It's the bane of my existence, that and out of balance. But I think, getting in and handling suspense and trying to figure out why it hit suspense, that webinar would be good. An F9 troubleshooting webinar is one I'd like to see, and a webinar on the new check reconciliation. I want to get our companies using check reconciliation, but I've got to learn more about the new enhancements. So I've got those three listed for future webinars, but I'd love to see what other ones we can as a group come together and have more webinars. Oh, good one. Best practices in AP and check reconciliation. Most definitely need that. So we're kind of winding down here. Any questions? If you've got any questions, put them in the question bank, log them in the chat, either one. If you'd like to raise a hand and have a comment or have some ideas, just let us know in the chat and we will unmic you. Any closing comments from Mike and Kathy as you guys are thinking of any last questions? Kathy, any closing comments?
Sure, go to the loudmouth.
Not me, no.
Yes. So I'm going to say that the more active this group is, a lot of times the activity and the endorsements and the enhancements go toward things that have to do with sales and inventory management, because those of us in finance are like, yeah, fine, I'll just deal with it. But if we don't have to deal with it, that would be excellent. So if you can get out there and endorse the ones that are related to finance, I'll give you a really excellent example of one that we pushed hard for and Infor did that was fantastic, which is the ability to reverse a cash receipts posting. So you posted something in a cash application and it was wrong, and now you have to go through the painful setting everything back up again in ARET, and you get all those -99 suffixes. And then that one was taken care of. You can now do a reversal for cash application. It's fantastic, but it only happened because people endorsed it. So I would say, echoing, endorse it, and more of these sorts of forums so we can help each other would be fantastic.
Yep. Mike?
The one thing that I can think of, and this is going to be a commercial for Kathy, balancing can be a challenge. I covered quickly, touched on a lot of things of how to get the data that you need to have for balancing. But if you get stuck, if you can't get balanced, Kathy or her team can help. So if you need additional assistance, that's a resource to go to.
And we do have another idea for a webinar on the workflow approvals for AP. That one, that's a good one. Yeah, that
That's
one we
fantastic.
definitely, I will add that to the list. I think best practices is definitely key. Oh, how do you do how do you do AR reversals? It's cool. It's a new feature, Web UI.
ARECR.
Yep.
It's a web UI. So whether you're CSD or on-prem with web UI, I can't remember which release it came out in, but it's been around for a while. As has the new check reconciliation center, which is really good too.
And it is security driven, so you can prevent people from being able to do that. And the other nice thing is wasn't there a reason why? So you could do reversals because we posted it incorrectly, or you could do a reversal because it was an NSF. And if it's an NSF, you could hit the customer with an NSF charge, which is really nice.
Yes. Actually, we've got a couple folks on who might know that. I would ask if Janice or Margaret or even Mr. Blessing would know what release that came out in, because some people are going to scramble and look for it to see if it might be in their version. They just don't have access to it.
Yeah, and I'd have to look. It was 1119 something. If you guys know what version it came out on, just log it onto the forum. And I am real big on any enhancement requests that you've got, make sure and socialize it within your company to get those votes. Okay. Oh, APOCR with an IDM, that'd be a good webinar. Excellent. So we've got some great ideas.
Fantastic.
Well, we're coming to the very end. I want to thank you all very much for a really good virtual meeting. We'll have, these are some great ideas for webinars and also for the conference as well. So Gloria?
Thank you very much, Della. And first of all, I want to say thank you to everyone for taking the time to come and join our esteemed presenters today. Della, Mike, and Kathy, thank you so much for sharing your wealth of knowledge. And with most of our webinars, this presentation will be available on our TUG website for future reference and sharing with colleagues to the appropriate forum board as well. We'll be placing the link so you can go back and touch base with it, and also be on the lookout for those white papers and PDFs and things that our panel is going to be posting to the forum as well. We'd like to invite those of you who are members of TUG to continue the discussion in the online forum, which is behind the members only portal. 24 karat gold, by the way, for those of you who are not yet TUG members. And in answer to that, I'd like to say, why not jump over to our website at theusergroup.org and join today. And also be on the lookout in your inbox, as well as on the forum boards. We've posted and sent out the email to everyone. Grant Howard is going to be delivering part 2 of his best practices on inventory management this coming Tuesday. So thank you again to everyone for joining us. Thank you to our esteemed panel. And as they say in Hollywood, that's a wrap. Have a great weekend, everyone.